Hello, everyone, and welcome back to the J22 report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And just want to do a little disclaimer. Nothing talked about on this video should be construed or conscribed as investment advice. This is just my opinion, my thoughts on the markets, and that's all. If you want to invest, consult a professional financial advisor. So anyway, let's get into today's news and market action. So if we look at today's data, core inflation rate 2%. That's the Fed's target year over year, 3.2% in consensus. So if you look at it, this is very strong data. And you can tell how the markets reacted. Look at it today. I'm gonna go look at this Dow Jones, that's up $242, S&P up $20, and stocks rises, cooling CPI cements rate cuts, which I don't think I think it's more economics, they'll say it is. And if you look at it, I was going to say this is not a good environment for gold. But as you can tell, if you've been following my videos, we'll talk about the wild card later. And if you look at it, silver, that's down 28 cents. Of course, they can't just go to Kiko. What's going on? Like they can't just go to, and then gold, that's down 17. Silver down. There it is. Thank goodness. Yeah, gold's down $17 today. Silver's down 28 cents. Not very good. Of course, strong data is not good for gold. And as you can see, look at this is whitehouse.gov. Yes, I told you we're gonna have a soft landing. We're gonna have a so you look at this, and obviously that's a lie. But if you look at this, you can tell the market reacted very kindly to this, and we're going to either need inflation to rev back up for the next run up in gold or bad economic data. So as you can tell, though, it's what I said that when they released strategic petroleum reserves, that was going to put pressure, that was going to lower the CPI this summer. And what's going to happen, in the fall or maybe the winter is starting there, maybe even the winter, in my opinion, is that we're either going to see one of two things. First, because of all that, they lower prices, demand's going to push prices back up, or the economy, since there's no longer all that purchasing of oil, the economic activity is going to decline. We're going to see worse and worse economic data. And so let's get into today's news. Still sharing. Shelter inflation is this is what they don't tell you, and this is why, in my opinion, inflation, unless they're willing to crash the asset market, is going to eventually go back up again, make another run, consolidating right now. But shelter inflation is the most disappointing aspect of July CPI, and there it is. Let's get rid of that. Shelter costs ticked up 4% month over month. So you can see rent and rent owners equivalent rose by 5%, which is owner's equivalent rent, which this time I was reading somewhere that it should be lower, that they think just it would be lower this month. And normally owner's equivalent rent is actually much lower than the rise in actual rent, because they should be using stuff like Zillow or the marketplace. But rent, I mean, it's still slowdown. Economists have been anticipating a slowdown in rent increases. Yeah, right. I mean, actually, they are. Yeah, they have, but it's not going to happen. So yeah, they're. So yeah, we're going to see this rent. I think will continue the increases. because this isn't stuff people need. People need rent and they need a place to live. So where this is why the inflation numbers they include stuff you don't need, but you need. Look at this. Even if monetary policy were to affect rents instantaneously, rents measured in CPI would only gradually reflect these market conditions. Like, yeah, that's a lot. Yeah, so we're gonna see, and this is why there's gonna be a big recession. People are gonna cut discretionary stuff because they have to pay stuff like rent. And then here's the other one: food inflation sticks around as egg prices shoot back up again. Eggflation is back. So look at this. So stuff like rent and food, the stuff you need, still going up. And so some not excellent news out of this month's CPI report. So cost of groceries jumped 1.1%. So yeah, I'd love to know where they shop. I wish my grocery bill was only up that little. Price of eggs, look at that, 19.1% year over year. That's probably more accurate to how much more. Like when I go to the grocery store, I literally only pick like what's on the list now. I don't even just browse around to find cool stuff I might want. I literally only get what's on the list because it's gotten so expensive. So yeah, 25% is probably the real number. And I mean, if they want to track inflation, they can just have an egg index. Like that's probably more accurate of reading. Like all they have to do is rent, eggs, and like gas prices. Like that's all they really have to do. So yeah, there you go. Eggs up 19.1%. So if you look at it, eggs like you have to farm them. So there's property cost in that. Because you buy farmland, there's shipping, you have to get them to store, and then there's stores have leases they have to pay, like all the costs, and then there's labor because the store, they pay employees, all the costs that involved, regulatory costs, everything is in eggs. Like all they have to do is, and look at this, egg prices. I mean, I don't look at all these stupid charts. Like there should only be one chart for eggs. They don't even have the numbers. Like there's this one, 3-year average. Okay, well anyway, doesn't matter. If you look at it, egg prices and it's going up. It's going up. See, even when they don't explain it. So BLS called BS. Look at this. Two other grocery items jumped out: bacon and frozen non-carbonated juices and drinks. So yeah, so non-poisonous juices and drinks that aren't going to kill you. Non-carbonated, probably stuff that's natural. Really, look at this: bacon, which everyone likes. And then Coca-Cola told Yahoo Finance that inflation drove prices higher. So fresh fish and seafood saw its biggest monthly decline ever. A lot of people probably don't like them. I like seafood, but I mean that's pretty good. So, but yeah, if you look at it, food's going up because like look at McDonald's. They have to do the $5 menu and it's still not so yeah, if you look at it, food inflation, eggflation's back. And so anything that's good is coming up. And the thing is, the CPI, even though that was a good reading, it's not a good reading because stuff we need is coming down. This more shows you why it's a good reading. It's because the economy's tanking. The automakers lower U.S. vehicle prices. They're not lowering because they want to, because they have to. No one can afford to drive. And then look at this, raised incentives. So stuff like buyer rebates, car changes, and all these fix-ups. I have all these gadgets on my car, and I have 5, 6 free visits where they just do work on them and they say they're great. And I have to go to the store. I have to go to the the dealer, and they do it for me. I have those for like 3 years now on my cars, and they're raising these lower leasing rates, financing rates. They're offering, and they're doing that because consumers can't afford to drive. They can't afford to buy cars. They have to take the public transportation. So they're doing all these and here it is. US auto market continues to show signs of tightening up. So if you look at this in reality, this lower inflation rate it is a bad thing because the stuff you need is still rising in price. That's why it's a positive number. But the stuff you can cut out of your budget, like for example, what's one way to get rid of your auto insurance costs and your cars? You just turn in your car, and then what do? You take public transit. Now, granted, some people in rural areas can't do that, but if you live, close to work, or you can walk to work, or you telework, and all these other things, you can take the public transportation to go somewhere. Yeah, why not turn in your car? Yes, it's less convenient, but now if you live in the suburbs, it'll be a little less convenient. You might have to take Uber somewhere, but I doubt people in the suburbs are turning in their cars. But if they're in the cities, they're probably so to get those type of people's buying cars again, they're lowering the prices and they're raising the incentives. And here it is, continues to show signs of tightening up. And yeah, anything else cool? Continues to keep downward pressure on vehicle prices. Average incentives in July rose to 7%. So that means that it's a higher cost to sell a vehicle because when you sell something, there's also the cost of sales. And sometimes there's also just stuff like commissions and everything else. Not just commissions, but then all these rebates, financing, these new upgrades they have to do. That all costs money. And so these costs are going up, but the price they're actually selling for the car is going down. So this is a margin compression. Margin compression. If you look at my hands, margin compression. And that's not a good sign for the economy. And this is why. The inflation reading was lower than expected. It's because companies are lowering their margins. And you can see from my other, things here, the price of eggs, the price of bacon, food, rent, all those are going up. So it's not like, okay, the cost of cars are going up, the luxury items, those prices, in a healthy economy, the luxury items that you want, those prices go up because so many people can afford them. There's a bidding war. Those prices should be going up, but the prices of like eggs, food, bacon, rent, housing, those should be going down because they're just so plentiful and we're so productive. But this is the opposite. We're less productive and we have less buying power. People can't buy things. So inflation's going down for all the wrong reasons, and this will lead to an economic collapse. But SUV segments are very popular. Whatever incentive levels in those two segments are well below industry average. So but yeah, it's yeah, segment, the let me see. And this is sort of the bifurcation. Let me go back. SUV segments. That's probably mostly in suburban homes. So they haven't felt the brunt of the recession yet, probably. So anyway, that's all we have there. And then here's the other one to show how bad the economy is. Homeowners still putting off big remodels amid, higher rates. It's because they can't, they're poor. That's why. It's not because of rates. It's a price problem. Well, homeowners are still hitting the pause button on home renovation projects. So there it is. Americans to cut back or delay plans to remodel or renovate their homes. So we're seeing more. US comparable sales declined by 3.6%. So Well, a lot of problems in the US economy, as you can see. Existing home sales continue to slump this year. Yeah, wait till the actual prices on homes tank. Wait till you see those things. So yeah, that's all I have to say. If you look at it, this inflation number, it went down for all the wrong reasons. It didn't go down because price of eggs and bacon and rent and everything else is going down. It went down because stuff like cars and luxury items are, and you can tell it's Starbucks, McDonald's. I've covered all the store. So, you're gonna have to go back to like 10 or 11 of my videos, watch them all. They're all good stuff, and see that the the luxury, the fun items that make life fun, people are spending less on that, and they're spending on more on groceries, rent, and stuff you need. So anyway, that's all I have for you. If you like this video, hit that like button, subscribe. If you watched all the way through, please hit that like button and subscribe. And I will try to do these as much as I can. Uh Looks on curve on term, one more up leg for the stock market and gold market. I think there'll be a big problem, but yeah, we're starting to see it. Inflation, I went down in April. I did that video when they released the strategic petroleum reserves. I was like, oh no, they're gonna do it's indirect welfare. Like that's literally what it is. So people can afford to travel that otherwise couldn't because of the higher gasoline prices. So they released the strategic petroleum reserves. So anyway, hit that like button, subscribe, and I will see you next video.